Hey guys, welcome back to the Passive Money Podcast. If you haven't seen us before, we're just regular guys that have navigated ourselves out of the paycheck to paycheck lifestyle. And we're going to be discussing and have discussed stories about our struggles that have eventually led to our financial success.
And this channel is really about giving people insight on what finances really is, leaving all the fluff and you know how most videos and people talk about passive income and things like that. It's just leaving all that noise out of the way and just telling the real deal stories about how finances work as on an individual perspective, on a business perspective, and on a family structure perspective. Uh, during the time when we're doing this podcast, we'll bring on different entrepreneurs, business owners, and things like that, and get their insights of how they're operating their business, how they're dealing with employees, and dealing with cash flow, and dealing with recessions, and dealing with COVID, and how their business functioned during that time frame. So with all that being said, let's get into the show and get off to the first question. Alex, in the news today, the Biden administration announced that they was going to push back the student loan forgiveness out to September. And what do you think about that and how that's working as far as loan forgiveness? And what's your view on the whole loan forgiveness program in general?
Just like we've talked about, in previous conversations, pushing back the student loans is going to have an effect on, and currently does have an effect on our inflation rate. As far as, when you look at what the US's largest asset is, it's student loans. So for them to forgive their largest asset, it just doesn't seem possible. And without them, holding people responsible for taking out this debt and paying back their student loans, not saying that, it's a bad thing to take out student loans, depending on what you're taking it out for, I suppose. But
Mhm.
taking out, any kind of debt, you should be responsible in knowing you have to pay it back. And that goes for any debt at all. So to hold back all this debt, now people have more income or cash in their pockets to just spend freely. And so now all this free buying, free spending, you have more people that consumers are competing with in spending on regular day products. And this is causing a competitive rise in regular prices at the grocery store, any kind of consumer goods. So I personally don't agree with, that idea of loans being pushed back. It just, in the end, for the person at first, it might seem like a great thing because now they don't have to come out of pocket every month paying this, but eventually it's going to catch up, and it's still a debt that they have lingering over their head, and they're going to have to pay it one way or another. Just like when they were doing the mortgage forbearance, where people didn't have to pay their mortgages. Eventually, you're going to have to pay your mortgage, and you have to pay off this debt that you've taken out. It can't just simply be put aside.
Right, but now understand when President Biden went out to campaign for president, his goal is to eventually forgive the student loans altogether. Do you think that will
Right.
happen? Or
I don't.
and
I don't see
before you answer that part, before you answer that part, so are you saying that inflation is because people are not paying student loans?
part of it. I would say
Right.
part of it. Yeah, I would say part of it. Um, but what was the first question about?
The first question was Joe Biden, when he was going out for president, when he was campaigning for president, his goal
Right.
or his campaign promise was that he will forgive student loans. So do you think that will come to fruition?
No, I don't think so. I mean, I know I'm a youngling and I don't have much experience in politics, but I don't
Right.
see it happening just off the simple fact that it's the United States' largest asset, and it's their largest asset. So not, it is a debt, but to them, that's the biggest asset. You can go on Google right now and Google what is the US's main asset or largest asset, and it's going to show you student loans. So for them to forgive their largest asset just seems impossible. It's like asking I guess if you could put it this way, it's like asking a renter, would you forgive your people, your tenants, and just let them not have to pay you, just let them live for free?
Well, in that aspect, going back to COVID, it was tenants, and I'm not talking bad about all tenants because that's not true about all of them. I say 80% of them during the COVID pandemic, they was maybe getting stimulus checks and maybe getting unemployment, and about 85% of tenants paid their rent every month.
Right, right.
But it was the underlying people that landlords truly had to sit there and eat it while tenants, I mean, everybody knew because it was in the news. They're getting PPP loans, they're getting unemployment checks that enhance higher than what they would usually get. They're getting the bailout money, the stimulus money, the paychecks from Trump and the president and the stimulus checks from Biden, and the tenant still wasn't paying the rent. So it was a time frame there, 8 to 12 to 16 months, where landlords was literally just the owner of the house, but the tenant was not paying rent, and there was nothing that they could do about it.
Right. I mean, correct me if I'm wrong, but like it wasn't the landlord deciding, hey, you guys don't have to pay your rent for
Correct.
X amount of months. It was the government that put that in act. But now you
Right.
have the government stating you don't have to pay us back our largest asset. So
Right.
to a landlord where his assets are rental houses, and I'm just making this comparison, I
Right.
can't see an investor or a business owner, anyone in that sort of area saying, you just don't have to pay me, or walking into a store and the CEO says, hey, all goods are free. That
Right. That's a
doesn't
good.
make
That's a good
sense.
one.
So,
That's a good one.
so like for the US where that's their asset,
Right.
they want you to pay them back because they're going to be collecting interest and money off of people that are in debt to them. So
Yeah,
for them
I think.
to
Yeah, I think with the rents, how high the rents was going up after COVID, the landlords were just like, "All right, I'm not going to worry about the rent that you owe me. Just hurry up and get out, so I can raise the rent here for everybody else."
yeah,
And
yeah,
and
right,
in a lot of cases, that happened. A lot of the tenants that was in properties during COVID that didn't pay, they're not in those same properties now. And
right,
the landlord, they can go, put it on their credit report or something like that, and it'll affect the tenant later, but the probability of that landlord getting those funds back from that tenant is literally
right,
nil, because when the tenant had extra money, they didn't pay, and then now that the tenant is back to just normal, regular job and things like that, and don't have extra enhanced income. Because let's be honest, most of these people, the unemployment checks and things like that, with that $600 enhancement on top of the unemployment per week, that was more than a lot of people was getting paid at their jobs.
right,
So if they didn't pay when they had extra money on top of extra money to pay, so when they go back to working, now that all of the unemployment is run out, they go back to working and they have to pay for their current living conditions. How will they ever have funds paying back the landlord? I think landlords was a lot of them was just happy that the forbearance process has waned off, and then they just figured that they would recoup their money moving forward. And that was a conversation I was having today because we was talking about how high these rental prices is, and of course me, I own rental properties also, and I was explaining to the people that I was talking to, this is the landlord's revenge. This is the landlord's revenge. So they had a year and a half, no rent, and then the rents was very low compared to historical. And I'm talking about Florida. Historical Florida rent, it's been low ever since the financial crisis. So when they saw the opportunity to jack the rents up, everybody's moving their rents up to market rates so they can recoup all the money that they lost before, especially given how much rent they lost in COVID and forbearances and things like that. This is kind of like the landlord's big revenge. And I don't agree with it. I don't agree with it on a couple points. I'm all about making a dollar. I'm all about making a dollar, but I understand the economics of it also. So if in my neighborhood here, or let's just not use my neighborhood, let's use the neighboring neighborhood. The rents for a 3 bedroom, 2 bath is about $2,500 to $2,700 a month. Those same properties was renting for 13 or $1,400 a month last year.
right. Almost
So
double.
and then pay the pay scale may increase 5, some people got lucky like getting the 10s and 15% pay increases, but most people on average get about 3%, 3% raises like that, annual raises. And so rent's going up 50%, but or let's say 25% a clip since COVID, 25% a year, but you're only getting 3% raises. So those 28, if the same person staying in that property, the rent has increased, and now that's 40, 50, 60% of their income. How do they have room for anything else?
Right.
So, but I do get the landlord standpoint of it, though. I do get the landlord standpoint of it, but I don't agree with it wholeheartedly, because when it gets to come to rental property, it's over the long term, and it looks like people want the instant return right now, so they're going for the gusto every time. And we can branch out more on rental properties later or something like that. But just getting back to the inflation side of it, do you have any more to add about that?
Yeah, I was gonna say, I mean, like you were talking about rates on rent and mortgages increasing. That's or and going along with people not getting a good enough raise or a high enough raise to match this inflation. It also goes for just like regular day products, all these consumer goods that have gone up. Understanding the gasoline inflation is because of lack of production. So that doesn't correct me if I'm wrong, but that doesn't entirely fit into like the separate inflation, does it? Like as far as inflation in consumer goods and stuff, right? That's strictly
Oh,
because of lack of production.
all right. Well, that's a tricky thing, but the price of oil going up as fast as it's going up, as much as it's going up, it has effect on everything.
Right.
When I mean everything, I mean everything. It's so look at it. We're gonna break it down in a couple segments here.
Okay, okay, okay.
So
I think I see what you're leading to, but go ahead, go ahead.
yeah. So let's go household structure first. Household structure first. All right. So if you're used to let's just say last year it was $2, now it's $4. So you have your kids in different school activities and things like that, and you have your budget set up based on $2 gas. Now the price of gas doubles. So instead of paying $50 a week, now you're paying $100 a week. You
Right,
didn't get that inflation. You didn't get 50% more in a paycheck. What that does is it takes away from other things and other aspects of the household. But again, the other dynamic is COVID. Everybody was stuck in the house for, call it 2 years. We call it 2 years. They were stuck in the house. Everybody has that goal to get back outside, get back outside, get back outside. And get back outside is driving the price up of oil also, or gas also, because demand drives prices higher. But again, you remember how I said the landlord is looking at it as, the big payback from COVID?
right,
The oil companies are also, because even though the demand is higher for oil and gas products, the oil companies are not producing more oil to meet the demand. That's why the price of gas is going higher, and it's still a windfall for the oil companies. Now you got to think back, before 2019, we saw $30, $40 oil, $50 oil, and all the oil companies were suffering because they was pumping oil at a very low price. So now that's why they're not in the game on the international scale. Are we talking OPEC, like the Irans, the Saudi Arabias and stuff like that, because they're recouping all the money that when they was producing oil at a low amount, they're trying to recoup it back at a higher amount, but not producing any more oil. That's why they're slow to add to the process, because they know that if they start pumping a lot more oil, the price of oil goes down. Unlike the United States, where all the oil companies are privately owned. You can own an oil company, I can own an oil company, your mama can own an oil company. All the other countries around the world, their government owns the oil, and they use the price of oil to subsidize their living. So what I mean by that, like the SNAPs or food stamp program, we, take tax revenue from people that work to fund that program. And let's say Saudi Arabia, people that's on subsidies and things like that, they use it from oil. So just so we can have an understanding here, and again, you got to remember history when oil was at 30, 40, $50 a barrel, $60 a barrel. A place like Saudi Arabia, they don't break even on the subsidies to their country unless oil is at $60 to $70 a barrel. That's when they break even. They don't even reach a profit until it gets over that threshold because of
Right.
all the things that they're doing with oil. Yeah, they could produce it for a cheap price, but with all the programs that they have, government programs for their citizens, it takes a lot more money for them to break even per barrel. And then, so now it's over that 80. So now they're recouping the profits from all the years that they lost money when oil was at lower prices. That's why they're slowly bringing it back on because they don't want to drop below that 70 $80 threshold of the break even point. And
Right.
that's how it is for a lot of countries around the world. That's why a lot of countries are not just on board. Let's pump more oil. Let's pump more oil because they know what their break even price is. It's all about economics. In the United States, everyone is privately owned. So they're looking at it. Every individual company is looking at it like the Exxons and things like that, the Chevrons. They're looking at it as the same that these individual countries are looking at it, but they're looking at, okay, we lost a lot of money, we spent a lot of capex and a lot of expenditures on producing oil, but now it's time for us to recoup. And they could blame it on the administration saying, oh, the administration don't want us to produce oil or whatever. But the truth of the matter is they want to gain as much profit as they can, bring more cash flow into their business with producing less oil. So that's more oil they have in reserves for later dates.
Yeah, if you look at like oil stocks right now, like you always tease me on this one on selling Exxon when it was like at 38. It's like over $70 right now last time I checked. So
Yeah,
you can tell they're definitely profiting right now.
yeah,
But on that point where you said it's really interesting where you said about America owning their oil privately where companies own it because I was talking to my wife's cousin who, her family's from Venezuela and
right,
Venezuela, from what I checked, they own 18.9% of the world's oil and the
right,
whole,
right.
and their oil prices are extremely low. And
Yeah.
she said, "Oh, but in the United States, you guys don't have a lot of oil, do you?" And I said, "Well, we have companies that, yes, do have a lot of oil, but it's privately owned. They can just simply decide to close the cap whenever they feel like it or open it back up. Whereas, in your country, the government owns it and, it's just flowing. I think diesel prices over there are like 50 cents a gallon from what she said.
I well, as you know, I used to visit Dubai a lot. The gas was like 25 cents a liter there. It was insane prices. That's why everybody can afford all those expensive cars because they don't have to pay for gas. So, and that's
Yeah.
that's the that's the dynamic of it. All right. Circling back to that question, the original question of that I asked you because I was trying to draw you in on this one. Did you believe that student loan forgiveness was the cause of inflation? And then, you stated your point,
Right, right.
and I already know uh if we didn't get any hate comments, we will get some after what I say. Uh I believe the total fiscal policy from 2020 after COVID happened, that is the cause of inflation. And what I mean by that is, now follow me here. Don't lose me here. Now, if you got anything, just let me know. But follow me here. So in 2020, and we're not going to even talk about the Fed. We're only going to talk about what the presidents did. No Fed. We're just going to talk about the presidents. All right, and the administrations. All right. So now, the when Trump gave out stimulus money, people didn't even lose jobs at this point. You know, it was stuff was closed down and things like that, and the service industry was impacted. So let me take that back. The service industry was impacted. So the service industry was impacted, and then impacted heavily. It's a couple scattered here and there, but service industry was the most. And then they gave the unemployment, the enhanced unemployment. So that raised people's income. A lot of people, it was way more than they was used to making. Then you add on top of that the stimulus money that came in. I believe Trump brought in two stimulus packages and Biden brought in one. And then they had this enhanced employment. So this is why I believe it was only this that raised it. Besides the fact, the Fed did lower interest rates, but this is why I believe this was the main cause of inflation. Because The rich, the wealthy, they already lived a set standard of lifestyle. They didn't change their lifestyle besides being in the house, but the stuff that they buy, they always bought it before, right? The people that was the people that was buying the stuff the most was the people with the enhanced unemployment benefits, with the stimulus money and things like that. It was people who had jobs like you and I, and people who didn't even need the money and received it. And I know of a lot of people, they did one or two things. They went and spent the money or they invested in the stock market. But those was the factors that drove up demand. It wasn't the, people in the 1%, the people in the top 10%. They already been living a lifestyle the way they've been living. They've been buying the things that they have already been buying. It was everything that the middle class and the poor was buying. That's where the demand went up. Because if you look at it, you don't hear about a shortage of supplies at Macy's, Nordstrom's, the high Louis Vuitton, or anything like that. You didn't hear about any shortages there. But you did hear it at the Walmarts, the Targets, the rim shops, the cell phone companies, and things like that. The thing that most middle class consumers consume. And that's where it was at. And I remember talking to a business owner in Michigan, and he's been in business for 20 years. And he's, has a rim shop, rims that you put on cars, so you can look cool.
Right.
I ain't cool, so I think I had rims one time back in the day. But I talked to him, and he told me, and I didn't tell him my philosophy on where all the inflation is coming from. And this is dead in the middle of COVID. Everybody's at home, working from home or whatever, and they stimulus checks coming out, the unemployment checks coming out. And he said, in 6 months, this is the best year I've ever had in the 20 years my business has been in. People ain't pulling up with Bentleys and Maseratis trying to get rims. There was people who was getting it. Then of course you throw in the PPP loan scams that was going out there and things like that. I mean, it was actual business that needed help, but you add on the people that was, setting up the fake businesses, getting the PPP loan and doing it. And I've seen a lot of nefarious things done with the money. So I believe that was the prime driver of demand. And of course, the news media outlets and stuff goes, they're going to say it's a supply chain issue. It's a supply chain issue because they don't want to come out and say, oh, well, no, we have a demand issue. Too many people got too much money, and that's the problem. Because of course, that will push away their constituents by saying that. So they're going to blame it on supply chain. They're going to blame it on the Chinas. They're going to blame it on everything. And is there a little supply chain issue? Little, yes, but it is not. It's not. They're not, operating at 10% of capacity in the supply chain. They're not operating at 50% of capacity. They operating in the 70s and 80s, but they can't even operating at 100% as they was back in 2019. It would not compare to how much production and how much output they would have to do today in 2022. And I believe all of that comes from just look at the supplies that it's shortage of supply of. Those are the areas where they're saying it's a supply chain issue. But if you just really look at it, it's all the products that the middle class and the poor buy, and that's the cause of it. And then you add on top, people haven't paid rent. And then, of course, most smart thinkers would be like, well, they weren't paying rent, they should save up so they can pay the rent. Or if they weren't paying their mortgage, they should save up and pay the mortgage, but they wasn't, because now you see people coming off of the forbearance from paying their mortgage, and now they can't afford their mortgage or they can't pay back the mortgage. So they wasn't saving it, they were spending it. So the extra money that they was not spending on mortgage, that was going out there in the demand side. The money that they wasn't paying on rent going out there on the demand side. The enhanced paychecks going out there on the demand side. The stimulus checks going out there on the demand side. And still the student loans, the $800, $900 a month people was paying the student loans, that was going out on the demand side. I remember posting a video, or not a video, article the other day where 91% of the people that's currently on student loan forbearance said they can't pay their student loans. What was you doing before? I mean, in 2019, you was paying it. Now it's time to pay it again. Now you can't pay it. What was you doing with all that money that you were saving that you wasn't paying the mortgage with? Because they was putting it out there on the demand side. That was the driver of the inflation, I believe. So all the hate mail, put it down in the comments there, but I expect that to come. But that is just the truth. And I always say men lie, women lie, numbers don't. Look at the numbers. Always look at the numbers. Forget what anybody say, myself included. You take what somebody say and investigate it yourself, and then you will see where the inflation came from. And that's my honest viewpoint on it.
And with the inflation rate, how it is right now, do you think in the future or near future, whether, well, let me say that again, whether long term or short term, either one, do you think we will see higher inflation or do you think we'll see lower inflation? Do you think we'll see deflation? Do you think it ever get to that point where it reduces and prices end up dropping in the future back to, lower than they are now?
Prices, well, dropping lower than they are now.
Or do you
mm,
think we set a new level like we
Where,
are?
yeah, because inflation don't resets to zero every year. It don't reset to zero every year. It doesn't
No,
do
no,
that.
of course.
But
I know.
so what I think will happen is the prices of goods will start flattening out. And the reason why it's going to start flattening out because the ease of getting money is slowing up.
Mhm.
If you look on CNBC, it's reports of people going from the brand names, the Tides, the Clorox, and stuff like that, and now they're starting to use store brands because the price of the name brand goods are going up so high, it's going higher than their wages is increasing. And then you add on raises in gas, raises in rent. And then now people got to start cutting back on food. And this is the funny thing, and I always tell you this, and I think I told you this before. When people first start cutting back, they cut back on the things they need first because they don't want to mess up their discretionary funds. They still want to go hit the club on Friday. They still want to go to the party and go out to eat. So they cut first, they start cutting the things that they need first. And then after that, then they start begrudgingly or not at all cutting on the things their discretionary funds to go out, or they'll just get a credit card and just charge that to the game just to keep it going. And that's what's going on. As far as I think the prices will stabilize, it will decrease some because again, the Fed is raising rates, they're raising the interest on things. Car interest rates are starting to rise a little bit. Home mortgages are starting to rise up there close to 5% now. So it's going to cost more people to pay for things like cars and homes if they buying them now than they would. So the demand for that will go down because people can't be like, oh, I can get a 2% a 2% house loan. So I'm going to get a house because I can get a $400,000 house for $1,200 a month and it's cheaper than renting.
So do you think prices on regular items like grocery store goods and stuff like that would decrease or just like cars and houses? Because man, like a pack of Oreos is like $7 right now. It used to be like $5.
Uh, well, the goods will come down because the thing is like we're saying, the demand will wane because it'll be more cost going to other things that people got to cut back. Instead of Oreos, they're gonna be buying the HEB or Walmart special
Right,
brands,
right, right.
and
Yeah,
then
yeah.
so the demand will go down, and then just based on economics and the supply demand curve and things like that, it will adjust, and then the demand for Oreos won't be as high, and then they will drop the prices, and then it will slowly drop to meet. And then, of course, the less demand it gets, the lower the company will drop the prices to drive demand back. And eventually it'll get there, but it will happen over time. It won't be
Right,
a
right,
light
right.
switch. It won't be a light switch at all.
Yeah, because when the news came out today, I think it was, right? Was it today or yesterday on the forbearance being pushed back for student loans or
Yeah,
forgive
today.
or eventually
Yeah.
talking about forgiveness? I just thought, could this continue to increase inflation, or do you think there's been so many change or not so many changes, but there's been changes put in place recently that can start cutting that curve and dropping it back down?
Uh, I believe, like we just discussed before, that I believe the forbearance is furthering along the inflation. The forbearance on student loans is furthering along the inflation. I do believe that wholeheartedly. The things that they're putting into place right now is curbing inflation, but I don't believe, and this is just my opinion, I don't believe them holding back student loans have anything to do with, they know that students are not saving that money that they wasn't paying the student loans before. And
Right.
they know that it's causing more inflation because those students are spending that money instead of paying back the debt. But again, this is a midterm election year. Midterm election year. Remember when President Biden was campaigning to be president, he said he would forgive student loan, he would forgive student loans. Midterm year. So let's say he didn't, and I fully expected him to extend it again. I think he will extend it again past January, the next one, because this one was extended to September. I think he will extend it past January to get past the midterm elections. Because just think, if he stops the forbearance now and he make those students pay it, start paying the student loans, those students, those students now, it's about 1.5, 1.7 trillion dollars in student loan debt. It's millions of people that owe on student loans that haven't been paying for 2 years. So he stops it now, and then those same people are, of course, they're it's college student loans. So all those people are able to vote. You think they're going to vote for his party to stay in office if he ends the student loans? No. So that's the reason why I think that he's keep pushing it back. He's going to push it back. But I believe that somebody's telling him, because it's a flick of the pen. He could do it with an executive order to forgive student loans, or a percentage of student loans with the flick of a pen. Executive order, he can do it, but he hasn't done it yet. Why? I mean, you could say, oh, because what's going on in Ukraine. You could say that, but it's a flick of the pen. I mean, I guarantee you he signed many documents a day. It's a flick of the pen. And I think what he's waiting on is for the midterm elections to pass. And then he's going to come out with some rhetoric about, hey, we're going to end the student loans, but we see that it's causing inflation. He might not even say inflation. He might not use that term because that'll be bad for the party. But he's going to find a subtle way to not forgive the student loans and then say, well, y'all had a 2-year break, so you should have been saving money to handle that endeavor. That's the route that I believe is going to go.
Right,
That's
right.
honestly the route I believe is going to go. So I have a question for you.
Yes. What's up?
All right. So in your, excuse me, let me get set up again. But in your experience, now I remember when we first talked years ago, and we're sitting there at the restaurant and we were just discussing finance, and I was giving you my viewpoints on finance. And and I told you that this journey is not, I mean, people will be happy for you that you're going on a journey, but it's not well received to convince other people on this journey. And I gave you a number like, out of the 100 people you talk to, you might get convince one person to start looking at their finances in a different way. So in that time, the 2 years or 3 years, time flying, we've been through COVID and everything. So in that 3 years, just give me some frustration points you've had with talking to people in general about their finances that just frustrates you out the wazoo, that just makes you so mad.
Oh, it's every day. I mean, it's when you really start to focus on your finances and make it a viewpoint of your life on a day-to-day basis where you are just constantly running your own numbers and you set your financial goals and you have these dreams for your future and these plans for your life on your finances, you look at it completely different from everyone else because not everyone else, and I hear it a lot, cares about money. And I do that with quotation marks because they say that, but they enjoy spending money. So you do care about buying all the stuff that money can get you, but you don't care about utilizing your money to support your own life in the sense that if you utilize your money towards your own good, towards investing or towards your own self, you can live free and truly free. A lot of people say that we are free because we live in the US, and I understand that on a political standpoint. We may not, we haven't had a war on our land since the Civil War or, before
Oh,
then.
wait. Hold on.
Sure.
I understand. I understand what they're saying by free, but free to me means free.
Right.
Every
Exactly.
every everything in America costs.
Exactly.
Everything costs.
And that's my point is in that sense, in a political sense where we haven't been conquered by a country or anything like that, yeah, we're free politically speaking, or we're free to go out to the store and buy whatever we want. We're free to go out of our homes and not be endangered or whatever. I mean, depending on where you live, really. But
Right.
you're not free. Like you said, you're not free. You are a slave to the lender. You
Right.
have to work at your job because you have a car loan. You have to work at your job because you have a mortgage. You have to
Now,
work at
now-
your job
yeah, yeah. Finish your thought, then I'll cut you off.
because
Go
you
ahead.
have because you have student loans. Now you have your career after college. Now you need to pay your student loans back. So you have to work at your career to pay these loans back. You have to pay off your credit card. You have to pay off whatever you've financed in your life. And if people would take that same money, and I say this from experience, and deploy that money towards their own investments or towards something that can grow their money, grow their wealth, they will start to see that they are more in control of their life than if they are just throwing it away at unnecessary items. And that is the biggest frustration because I can never explain to anybody. Oh, I take that back, maybe like two or three people, that having money, having money invested, having assets, knowing how to manage money, staying up all night, looking at numbers, studying the stock market with you, especially in our group and everything, you start to take control of your life and you start to feel less and less dependent on your job because now you know where your money's going, you know how it's going to grow, and you
Mhm.
can produce another income. And if, as we've talked about, like in Rich Dad Poor Dad, wealth is just making enough income on your own, not from work, but passive income that can cover your expenses. And anything beyond that, you are wealthy. You can now live and pay your necessity expenses off of the assets that are paying you. But people don't grasp that. And what I hear the most is, oh, you have to enjoy your money, or look at all your success. Why don't you go buy this or buy that? Why don't you can't take the money with you to heaven. When you die, it goes away. And, I
I hear
don't
that
know,
many.
you
I
know,
hear that all the time.
yeah,
I hear that all the time.
so I mean, while that might be true, the value of owning my own life is way more valuable and important than owning a material thing. I don't care about little gadgets and this and that. And if I do spend money, as we've talked about in a previous video, how I look to see how can it benefit me? Can I deduct it from taxes? Can I resell this item if I were to resell it in the future and make a profit if I want to get rid of it? Most people are buying things that, after they get tired of using it or want to get something new, they can't even resell it for what they paid or even more for what they paid. And so it's just a complete loss to them. It's an expense out of their pocket that they can't even deduct, and then they can't even recoup their money back when it's time to get rid of it.
Right.
And it's just a matter of looking at your finances different. I mean, there's really nobody, just about nobody, that can understand that. When you just think about where can I be, like, in the way I looked at it when I was starting this out was, if I had constant, whether it be constant cash flow, or if I had a mass amount of wealth that I grew and it could cover all my expenses, then I could literally live life the way it should be lived. I could do whatever I wanted to. When you work a day job because you have to, you're just a slave to that job. Because even if you can travel, you still got to come back to work, and you still got to be at work the next week if you took a week off, or you still have to clock in and out. You still have to go back to that same spot in order to keep funding your expenses. And if you manage your own wealth and you have your own income and you have your own assets, they take care of you, and then you can just live life however you want to live. If you have a passion, you can follow it while being supported by the finances from your assets. Like, I've talked to friends, for example, who are like engineering people, right? Like they're
Right,
going to school
right.
and be an engineer.
Hmm.
And as we've talked about before, there's different forms of these people. You have, like we talked about, you have doctors that work at a hospital, and then you have doctors that own hospitals. And then you have engineers who, work as engineers, and then you have people like Elon Musk. So it's a different mindset. You could still be a part of that same field if that's your passion, but learn how to invest your money into assets to where now it's just funding your projects, and it's not a liability or a obligation to go to this place because you need to pay your bills. So,
Yeah. All right. So I was gonna cut you off. So I got three
uh,
things.
go
Now
ahead.
that you
Yeah.
you had some good points, so I got three things. First thing, I just realized we was matching black shirts. I just realized that. I
It's
just
actually dark blue, but
yeah, we weren't even coordinated. We didn't call each other for that one. But the second thing, you probably didn't know you was a preacher. You probably didn't know you was a preacher. What I mean by that is when you said that people are slaves to jobs. What they are slaves to the job because, and I was pulling it up while you was talking, but Proverbs 22:7 say the borrower is slave to the lender. They're not slave to the job, they're slaves to the debt. So
right,
when they go get, all these exorbitant car loans and rise up their credit card bills, raise up their credit card bills. um, they have to keep working to pay the debt, keep working to pay the debt, keep working to pay the debt. And then they're in that cycle of, hey, I want this, so swipe the credit card. Oh, I'll work to pay the debt, work to pay the debt. So that was the second part that I had there with the slave to lender. And then the other part was the thing that, and you said it, they exchanging time for money. So they're going to work and they're exchanging their time for money. And one thing that I realized, and this with a lot of studying of, reading books and then talking to people that's way well off than I am, is people that's heavily in debt and people that's in the middle class, people is, and I know it's politically incorrect to say poor, but people in that area, it's I don't believe that they value time, or not value time, but understand time is money. Follow me here. So in life, things are things are infinite. Things are infinite in life, but your life cycle. So when you was born, there's the day that you're going to die. You don't know what it is. I don't know what it is for me either. But it's a finite time on your life. So if
right.
people started, I believe if people started looking at when they buy products or when they get into debt or buy stuff, how much time of my life will it take to pay for it instead of how much money, then they would look at it a different way. What I mean by that. So if let's just use something rudimentary, a pair of tennis shoes costs $100. So somebody has to work over 10, if they're making $10 an hour, they have to work over 10 hours of their life just to get those shoes. And the reason why I say over 10 hours is because of course they're gonna take out taxes, so you ain't gonna get the whole $10 an hour. But they're gonna take out 10 hours of their life to get those shoes. And then you start thinking of car payments and things like that. And I believe we did the numbers. We
Physical
talking
labor.
years of your life to pay for something that you won't even see the full fruition of it because you trade in cars, you get in accidents, you underwater on cars and things like that. And you're paying way more than you bought the car. So you might pay $20,000 for the car. Well, now with these inflated prices, $40,000 for a car, but you're really paying, if you pay the monthly payment every month, you're paying $50,000, $60,000. So just divide that up into how many hours a week times how many months you have to work to pay that off. It's in years. So people are literally spending 5 years of their life, and that's if they hold on to the car. They're spending 5 years of their life just to pay off a car. But most people, like I said, they trade in the car and do it over and over and over again. So they trade in all of their time for money to pay off the lender. But, and I'm not against, having a car or anything like that. But what's wrong with, you're going to exchange your time for money? Why not exchange your time for money, and you're going to have a car? Why not just I mean, not buy the car cash. That's not what I was going to say. What I was going to say is hurry up, pay the car off, and then don't get another car. And then you can save those monthly payments that you was paying for the car and start saving it so you can do other things that you want to do. One of the points I wanted to bring up, 401ks. 401ks. How do you
Right.
feel about 401ks, and how do you implement 401ks in your life to benefit you and your family?
So the way we use our 401ks, between my wife and I, we work at the same company. We both contribute to 401ks. We use my income, what I make from that salary, not external incomes. We use my income from the job I work at to cover our expenses.
Okay.
So with her income being free or freed up, we use well, not 50% now, but 44% now, which is the max to contribute to her 401k. So the max this year being $20,500 a year. So about $1,700 every month coming out of her paycheck to go out to 401k. In
That-
my scenario, I want to get to that max. Right now, I'm at about half of that max. I'm at like 10,000, around there.
All
And
right,
I'm
so let's pause so we don't lose nobody here. So you said the Mac, you saying Max, Max, not
at the
Match,
max,
right?
not the company match, but the actual max as the IRS explains it, where you can contribute 50% of your income or 20,500, whichever number is higher. So in my scenario, I'm contributing 20% right now. So for the past 3 years, I've seen the same paycheck because every time I get a raise, I just keep increasing, increasing, increasing. So I see the same amount coming in, and we just keep living off of that same amount. So currently I'm contributing 10,000. So that's about 30, almost $31,000 going to 401k right now. Eventually I do want to get it up to the full 41,000.
All right, so
And
how do
yeah.
oh, go ahead. Sorry, go ahead. Don't want to cut you off. Go ahead.
No, I was just gonna reply to your other question where the benefits from that I like are not even including loopholes we've talked about, but it's a long-term investment for you. And if you pick your own investments, you can see true growth. A lot of these companies will put you in investments where you're only seeing 3, 4% a year. But like we talked about, we've seen
Hey,
already.
you got ESP or ESPN or whatever the thing's called? Because that's the question I was about to ask you. All right.
Okay, let me
So
back up. Yeah,
no,
go
no,
ahead.
no, you're fine. You're fine. You're fine. So the question I was going to ask, so now that you invest in the 401, did
Right.
you invest in whatever the company default set you up in to invest in that 401k?
No,
The default
so
investment.
I mean, once I got the 401k, the company puts you in an automatic default, but I went in and just changed all that. So
So why did you change it?
because
And I'm asking, so explain to the audience to understand what's going on in corporate
yeah,
America when it comes to 401ks.
so I work at the same company that my wife works at, that my mom works at, a lot of my family work at the same company. When I was looking at the 401k, I first looked at my mom's and she wanted me to adjust her investments. She was making 4% a year and she had like 13 like bonds and things like that, and it was just ridiculous. Like it made no sense what she was invested in. And she told me, well, that's what they gave me, that's what the company put me in. So then I changed it to 4 mutual funds, a growth fund, the S&P 500, income fund. I forgot what the other one was. But from just doing that, the first year hit like 23% 1 year. So it went from 4% annually to 1 year, 23%. Then the next year was 21%. And those were the same stocks that I put me and my wife in. And if, just by researching these stocks, because you can go into your 401k, you can look at what the company has you in, and you can look it up on Google. You can just type in the symbol, it'll tell you For example, SPY would be the S&P 500. So that little 3 to 5 letter symbol, that's going to be what you can look up on Google and read up on the stock that they have you in. And we just did that and decided to go with these 4 mutual funds. And I remember talking to you about, which stocks that they had, and you helped direct me into that, into those investments. So some of the other benefits though that I like with 401k that I don't think is highly talked about is the automatic income tax deduction from it.
Right,
Where,
right. I like this one.
so if, let's say if you contribute 50%, you would be making $42,000 a year, or I'm sorry, $41,000 a year. So the 50% will put you at 20,500 exactly. That $20,500 deduction, now when you do your taxes, you show that you only made $20,500. So then you get taxed on that. And if correct me if I'm wrong, but then you also get, what is it, 25,000 exempt. So essentially you're paying no taxes.
Right. Yeah, you got a point there. You got a point there. And so, and this is, and I agree with you on all the points you made about the 401k. So what usually happens in a 401k is the company will put you in a 401k, and then most employees, they believe, oh, the company knows more about investing than I do.
Exactly.
And this is a question I always have for people when they come to 401ks, and I'll share a story with you a little bit later. Um, it's if a company, if a company, if you're an employee for a company, why would I put you in the best investment where you can make so much money where you can leave the company? Why would they
Right.
do it? It doesn't make sense, right? So what most companies do, they put most people in what they call a target retirement fund, and you set your date to retirement. So if you're 30 and then you're going to retire at, when you're 65, so then they'll put a 2000 what 70, 2000 whatever, 2060 target uh mutual fund. That's what they'll invest you in, closer to your retirement age. And then that fund itself is a mixture of stocks and bonds, and then it rotates as it get closer to you getting older. So what I mean by that is early on it's in more stocks than bonds, but then when you get closer to your retirement age, it goes more bonds and stocks. So now it gives you between a 4% or let's say 6% return. And then what happens is the part that everybody missed, if you actually go into your mutual fund, and I'm not going to show it on the screen because I don't want nobody to get me for, you know, giving financial advice. But if you pull up your 401k and you look at the mutual fund you're in, it's a thing that's called a prospectus that's inside your 401k. And Alex, me and you talked about it when we was going over your mom's 401k. But it's the thing that says the prospectus, and then it gives you the average return that the mutual fund did over 5 years, 10 years, and since inception. But if
Right.
you scroll down a little bit more, they have this thing called an expense ratio. And then the expense ratio, when you see it, the expense ratio 2%, 3%. So that means you're paying 2 to 3% of that return that you're getting a year to the manager of that fund. So all in all, you might do six, and that's why you're seeing 4% on your mom uh returns. You might do 6%, but 2 to 3% is going to the management fees of it. So
Right.
that brings you down to 4% returns. And then there's another part on this prospectus that it gives you how this fund uh, performed against the benchmark. The benchmark is the S&P 500.
Right.
And the question I always ask is if your fund is performing less than the benchmark, which is the S&P 500, why not just be in the S&P 500?
Right.
And then and then it's always and then there's a list of mutual funds, but there's always one that will mimic the S&P 500. And
Right.
then if you pull up the S&P 500 mutual fund or whatever in the 401k, you'll see the expense ratio is 0.02%, 0.03%. So you're paying little to nothing in fees to be in that fund, and it outperforms everything that is benchmarked against. I remember on CNBC a couple weeks ago, they showed mutual funds that outperformed the S&P 500 or underperformed S&P 500 in the last 5 years. It's crazy to think that 83% of the mutual funds, of all the mutual funds out there, underperformed the S&P 500. So do you think that, or do you want to take the gamble and say, oh, the fund that my company put me in is going to outperform? No,
Right.
just play the benchmark. Just go with the S&P 500. So back
Right.
to that story I was telling you about where, so I'm working, I won't say the company, I won't say the name or anything, but I'm working with this company and we have a 401k, and one of the employees, they came to me and and we were just talking about, investing mutual funds or anything like that. And then they asked me, they said, and then I said that almost to the same thing I just explained just now about how the expense ratios work and things like that. And then so she asked me, and I'm probably giving up too information when I say she, but she asked me, she said, hey, can you look at mine? I said, only if you want me to look at it. Sure. And then so we looked at the fund, and then I explained the same things I showed you, the benchmark, the expense ratio, and why not just be in the S&P 500. So of course, she's a little weary because the company put me in these funds. The company wants the best for me, right? And then so, excuse me, I had to wet the whistle. But but so the so we look at it, and then she's in the, like I say, target retirement, target retirement. She's been there for a pretty long time. And then so I said, this is what I'll do. I said, why not put a quarter or a half in what I'm talking about? And then you leave the other half or three quarters in what the company already have you in. And then let's circle back in a year and we'll see which one is outperforming which. So she agreed to it. She selected all the buttons and everything else. She did it all herself. And I said, look, I'm not changing this for you. I'll tell you what to do, and then the decision up to you. Go home, talk to your husband, and talk about it. But she came back, and then she switched her investments, and then she went 50-50. So, I said, we'll circle back in a year. 6 months later, she comes back and said, no, we need to change all of it. I said, why? She was like, because this is going up by X amount, the S&P, and this hasn't done nothing. I'm like, well, yeah. And I was like, that's what I was explaining. I was like, and that's what I was telling her. That's what I'm explaining to you, that you're going against the benchmark. Why not just invest in the benchmark? So then she ended up transferring the rest of her funds over there to the SPY. And, with turnover and things like that, then she ended up leaving the company. But she ended up giving me a call after she left the company. And then she said, you know what? I made more in the last 4 years, because years passed at this time. I made more in the last 4 years in being in the S&P 500 than I've made the total time I've been there. And she's been there a lot of years. I'm not going to say the number of years because I don't want to narrow it down to which employee it was. But she was like, I made more in the time than I made the whole time being in the target retirement. And that's the thing that I want people to understand, that the company is not going to put you in the best place so you can leave.
Right.
And no matter what companies say, me, I'm a business owner myself. I want my employees to succeed. But do I really want them to succeed so much where they leaving and going somewhere else? Because I have good employees. So why would I want them to leave?
Right.
But I'm not gonna stunt their growth. I'm not gonna do like corporate America and try to stunt their growth, but I'm not in a hurry for them to leave either as a business owner. But I look at people different. I look at them as people first, then the business second, because if they do leave and move on to bigger and better things, I'm always happy for them. I always champion for them. If they going somewhere else, I'm always like, hey, this is a good person. If it's a good person. But really, as a business owner, I'm like, oh, now I got to find somebody else. Now I got to train somebody else. Now I got to get them up to date on the standards and procedures that we operate with. So those are the things that go on in corporate America that people don't understand, and they just put it on automatic pilot.
Another thing with the 401k that is such a great thing to use if you are working at a company, and I've tried to explain this to a couple people because this doesn't happen often, but speaking with a couple people at work that not in the same situation or same day or nothing, but people that have found other sources of income or maybe gained a large slum of money or sum of money, slum of money, gained a large sum of money.
Right.
And, now they're telling me, oh, I just got X amount of money. And usually it's over the $10,000 mark. I try to explain to them, why don't you hold on to the money, invest the difference in your 401k, and then use that same money to eh, fund or for your regular expenses, because now you're going to have to pay taxes on that money if you don't figure out a way to write it off. And I mean, that's always a topic for another video or something, but
All right, but there. Wait, we can stay. Now we can use this topic now because
oh,
I know
okay.
you. I know you old. You about 700 years in real people life. But YOLO, man, you only
I
live
mean,
once. That's how they. That's how they go.
because when you I mean, and it if there's a way to legally avoid taxes, it should be taken advantage of. And most
No,
people get too concerned with tax deductions, tax write-offs, things of that matter, where they think that they're cheating the government. No, these are written in the laws telling you how to legally avoid paying taxes. It's not tax evasion, it's just simply listening to what the government has put out there. But people don't look into the tax laws. And so with the 401k contribution, it's an automatic deduction. So if you are contributing the company match and you're putting in 4 grand a year, you still have another $16,500 you can invest. So say in a lot of cases, in one case, it was one guy who said, oh my gosh, Dogecoin just went up and he made like over 100 grand. I said, well, you can just max out your 401k for this year. And now you have like another $20,000 deducted from having to pay taxes. Because I told him you're gonna have to pay taxes on that large
right,
amount. So figure out a
right.
way to still hold on to the money and invest it in a different way, and then just pay out smaller sum of taxes if you can't figure out how to write off the whole thing. But that is one of the greatest benefits to the 401k if you can afford to contributing that much.
The part you said just now about people not understanding the tax loopholes or what have you. The thing is, the reason why they call them loopholes is because nobody reads. That's like
Right.
the forgotten art in America. It's not a loophole. If you pull up the IRS tax code, everybody only looks for one thing on the IRS tax code. They look for the chart. I make this much. How much do I owe in taxes? That's the part they look for. But if they look at the rest of the IRS tax code, it say if you do X, you don't have to pay taxes or little to no taxes. I'm not gonna say none, but little to no taxes. But people don't look at that. It's not a loophole. It's in the law. The law
Hmm.
said, hey, if you do this, and when it comes to 401k, 401k comes out pre-tax. That means it comes out before your money is taxed, so it shows you make a less amount because, of course, the government is going to tax you on the lump sum when you take it out, when you're 59 and a half or 65 or whenever you take it out. That's why it works. It's not a thing, but the question I have is everybody's sitting here thinking like, oh well, yeah, it's easy for Alex to say go invest, you know, the max, not the match, the max, because he has it. How did you get to that point where you were able to invest the max? Because I know you didn't just, hey, I'm a billionaire trillionaire, here go the max. So how did you get to that point?
When we decided to how we were going to manage our funds, because we really started thinking really hard on our finances when we moved into the house, because we were like, now we're married, we got a house now, how are we going to break this up? And we 100% agreed upon combining our finances. Now we have separate bank accounts, but we combine it together. And then we have a joint account in our brokerage account. But direct deposit goes to like separate banks, and then we just kind of put it all together. So,
Mhm.
with that being said, we decided strictly we're going to use my income for all expenses. And our expenses just need to fall in that budget. So
All
the
right.
money make
Before you go to that, how? All right, now because we talk about most people here, how did you get your budget to? How did you get your expenses to fit inside of just one income?
living below our means. And it was by our cars that were used. We had no car payments. We came into, our house, so we had the mortgage. We had no credit card
All right,
debt.
I'm sorry for cutting you off. I'm sorry for cutting you off. But how did you get the ability to have no car payments?
Having cheap cars.
And then why
Simple.
did you decide to go? Why did you go decide to get cheap cars?
Because it just took us from point A to point B. At that time, we weren't doing anything extravagant with our cars. We live in Central Florida, and we were just kind of staying in that area. So, not going long distance or using it for work or nothing, we didn't need anything huge or glamorous. And to us, it wasn't really even that attractive to get a brand new car. Our attraction was more on getting our finances where we wanted it to be, our money
Mhm.
where we wanted it to be, our investments. So that was our biggest focus was look where we could be in 20 years if we stick to this financial plan. To have cars was only going to be a setback because that would be having a car payment would be money taken out of our monthly investments basically. And
It'd be a liability.
the car thing was just not an interest at all. But going into it, I mean, we didn't have extra expenses, so we said, okay, just having the mortgage, lights, utilities, food, let's keep it like this. And then if we want stuff, if we want nice furniture, I mean, you remember the yellow sofa we had that just looked horrible, and we had that thing for we had that thing for like we
Yeah,
we uh,
I remember.
we
I
got it from
remember.
a great family member who gave it to us, and we had that thing for like almost 2 years or 2 years. And then when we got our new sofa, we didn't even we spent, and I'll say the amount, we spent $780, and it was because we looked at the best discount rate we could get. And then of course, me, I was looking into like, okay, can I write this off? Can I, how can I
Right,
get it?
right,
So
right.
so we only spent $780. And a lot of people, you'll hear them spending thousands on furniture, and that's not us. If, for our bedroom furniture or dining table, because obviously you need to furnish a house, but those things we spent like $500-600 on for the whole bedroom set, for the dining table, and it was buying it used, but not extremely used because obviously you want something cleaner. But finding we it was a family friend who had just bought it, and then they were moving to another house, and they're like, "Hey, we'll just get rid of it. We'll sell it to you guys if you want."
Right.
So we
And not to wait, not to cut you off, but you brought up a good point of you saying a house, it needs to be furnished. And I agree with you 100%. But the thing is and when you said it, as soon as you said it, I got this from somebody that was used or I bought this used, I think of the replies that of everybody else that will say, "Oh, well, no, I can't do that. I can't do that." And it's amazing to me that people even think in that concept because they rather because let's be honest here, if somebody bought a house and they figured ain't nobody coming over here, they wouldn't care about
yeah,
how the ambiance and stuff for the house. People buy stuff to impress other
right,
people. And
exactly.
and and then I'll touch on a point. Just remind me. I'll touch on a point about spare bedrooms, but I'll Remind me on that one so I can come back with that one.
Yeah.
But that's what people do. People do. I remember the first time I came to your house. I'll never forget it. Everybody's excited.
Right.
Alex, young gun, got the house. He fresh. He
Yeah.
fresh off the. I can't say that word, but he fresh out his mama womb, and he got a house. Big deal, big deal. And I remember calling you, saying cool, you got the house, and things like that. But when I got there, people wanted to, hey, do you want to look at the house? Or they was mad at you because you wouldn't show me the house. And I just said, it's a house. It
Yeah.
got bedrooms. It got. I mean, I was already sitting in the kitchen. Kitchen, okay, you can cook. You know, it's not. And my friends and things like that. I don't care if you stay in the projects or you stay in a $20 million mansion. It's still a house to me. It doesn't that part doesn't matter because the truth is 80% of your time is only going to be spent in three places: the bed, the kitchen, and the bathroom. Long as the toilets work, long as your bed don't got bed bugs or nothing, and the eyes on the stove work, what else do it matter? It don't matter that I come over once a month or whatever and see your house. It's
Right.
about what is comfortable for the people that have to operate and function
Exactly.
at on a day-to-day basis. And then, I mean, you remember, my wife was living in Europe. I just brought the lawn furniture from outside because I let them take all the furniture. I let them take all the furniture to Europe. I
Yeah.
just bought the lawn furniture from outside and just used that.
And
I
that was the
didn't
thing with
go.
us. Sorry, I didn't mean to cut you off. Oh.
Go ahead, go ahead.
And that was the thing with us is, with buying furniture, it was things we wanted, but not until we found a discount or until we found a great deal or how we could buy it and it would not affect our monthly investing. We didn't want our expenses to overtop what we're investing. We didn't want to take away from our investing to buy something that would not put money back into our pocket. So buying things, I mean, we just got like a new TV console and someone left it on the side of the road. I just grabbed it. I was like, that thing is nice. So I grabbed it and now we got a
There
new
you go.
TV console. We had, I don't know, you've never been in this room, but um, our curtains, we had them on thumbtacks for a whole year. And then I was like, babe, I think we should get curtain rods. And she was like, no, 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 not yet. I was like, they're like $30. Like we can spend 30 bucks this month. And but it was just the matter of doing that. It was just buying stuff. We just waited until we were buying stuff from I think Sears, either Sears or Macy's when like they were going down in business, so things were like
Right, right.
75% off. So it was waiting until okay, we'll buy this a little at a time. Like not just oh, we moved into the house, let's furnish everything. Like there was no need to
Right.
do that.
Yeah, it's no need at all. And again, like I told you before, and we talked about it in the previous videos, when I built the house in Texas, and it still make me cringe every time I think about it, and then didn't have a job and stuff like that. I was I was swiping the card all the time. I mean, that house was so built from the ground, it didn't even have blinds in there. So I'm swiping for blinds, I'm swiping for this, I'm swiping for this. I'm buying furniture that I knew I couldn't even sit on because it was too expensive for me to even sit on. And I was doing it for the ambiance of other people. But
Right.
now going back to that thing about the spare bedroom and like I was saying, the ambiance of other people, that and then I realized, don't nobody even come over here. Why the hell am I spending this for people that don't even come here, where I was cool with folding chairs, or you could have put a mattress there, I could have watched TV in the living room and it would have been fine. And that's when I started to mature more in money. But of course, it took me time to mature in money. But that was one of the things that I realized, that I'm doing it for other people. I'm not doing it for myself. Now, when it comes for the spare bedroom, again, I must always say, follow me here because I can take you down a rabbit hole. So if I lose you, let me know. All right, spare bedrooms, and I understand most houses come standard 2 and 2, 3 and 2, 4 and 2. However, like me, I have 4 and 2. But if again, my motto, me and lie, women lie, numbers don't. So now just think about this, and you can, go with this over your head. If people have a spare bedroom, and then usually they put a bed in there, and they dress it up like it's a bedroom because guests, right?
Right.
That's the normal reason why people do it, for guests. So now we just thinking square footage of a house. You paying 150 to 200 a square foot of a house. So for a spare bedroom, it's costing you 50, 60, $70,000 for a spare bedroom. And then you add on the mortgage, the interest on top of that, then it balloons higher, right?
Right.
But if you're not using the bedroom, that's just money that you're spending for nothing. Now, if you think about it, how often really do people come over and use your spare bedroom?
Right.
Yeah. And then so you add that to the fact, uh, and then this is the point. So just imagine if you didn't have that spare bedroom, and then of course there's no one in one, so you always have to have a two. But you you have, I mean, of course people say, oh well, I might have kids later. Got it. Later. Don't know what later is, but they might have kids later. But so let's just imagine if your house is 3 and 2, right?
Yeah.
All right. So imagine if it was the 2 and 2, you would have paid less money for the house, right?
Right.
And just so that spare bedroom you have there, and I'm not trying to bemoan you and saying, hey, you need to sell a house to get a 2 and 2. But what I'm saying is that spare bedroom is an extra 50, $60,000 on cost that will rarely, if ever, be used. And so with just the concept of guest bedroom, let's just use that concept of guest bedroom. If you focus on it's just being a guest bedroom, wouldn't it be cheaper if you didn't have to pay that 50, 60, $70,000 and you just had it in a bank account? And then if somebody said, hey, Alex, I'm coming to visit you from out of town, and you actually use your guest bedroom, you would have enough capital to put them in a hotel for a couple days and go on about life and still have extra on top.
Yeah.
All right. So in my house, my dynamics, I have a 4 and 2. 4 and 2. I was about to put 5 fingers, but I only got four. 4 and 2. And then so every room in my house is used. And what I mean by that is, so here, right here, this is my office for the business. And then my wife have an office for her business. Then my son have his bedroom, and then our bedroom total. But even though we got the house for steal of a deal, I hated the fact before my wife had her business to just have a room sitting there. I'm looking like, but of course I know I couldn't ever find a house for the deal I got this one for. I paid like a 2 and 2 price back then for a 4 and 2. But those are the things that when I see people have spare bedrooms, I only look at it as, oh my God, they wasted so much money. And some
Yeah.
people have 5 bedrooms and then two of them spare. And I'm just thinking like,
Right.
oh, well, you spending a lot of money on this
Right.
here when it's just empty space. And
Right.
then so that's how I look at it. And then but if
Good
people actually sit there and looked at it and was honest with
point.
themselves, they have this spare bedroom dressed up, looking nice, waiting for company to come over. But in truth, company might come over and spend the night once,
Oh no.
twice a
I mean, in
year.
our case, we have family coming from other countries, so man, they're here for half a year. But no, I
We,
mean, exactly. You got a point for
yeah.
sure.
Well, I'm talking about for the people that got
Yeah,
domestic
yeah.
wives and domestic families. They ain't spending the night that long. Living below your means. When it
Mhm.
when it comes to living below your means to be able to put the max into a 401k, what is that life like? Is it because people get it misconstrued? Live below your means. People think that, oh, you want me to live like I'm poor or something like that.
Yeah. No.
Or but what does that actually mean to you? Then I'll give my insight on living what below your means to me.
to us, it's not saying you have to live like a bum or nothing like that. It's just make your investments, make your finances your priority before your expenses, before your leisure activities. It's not to say live like a hermit and just hoard money and, stuff in cash under your mattress. It's just make your finances your priority. Put it before your expenses. You can still set a budget for leisure activities or, buying things that you want around the house or whatever. But it's investments first, and then after our investments, everything else has to stay within this budget. You could
Right.
still enjoy life, just don't live like underwater and
Right.
being paycheck to paycheck.
Yeah, and then my view is pretty much similar to yours. And I talk to people all the time, and I'll first thing I always say is live below your income. Live below your income. And
Yeah.
this is the first default. What about quality of life? The thing is, I said live below your income. I didn't say you could make more income.
Right,
Only thing I'm saying is if your quality of life is here and
right.
then your income is here, you got to find a way to do one or two things. You need to lower the expense or you need to raise the income. But when you raise the income, don't bring your expenses here. Get a set expense in life and stick to that. And I remember going through my journey, it was, hey, we was living on a set amount of money. And then let's just for exercises, let's say our living expenses was $2,000 a month.
Mhm,
$2,000 a month. That was including spending money and everything. Let's just use that as this exercise. We had a set amount of money. So when I got a promotion, we didn't move our expenses up to my promotion or saying, hey, well, since I have this position, I got to live the lifestyle of this position. We still kept our expenses at that level, and then we just raised the income, and then all that extra income we was able to invest in stocks, we was able to invest in mutual funds, we was able to invest in businesses, we was able to invest in real estate. And that's how it is. And then the more we went up in income, because that's what everybody focus should be on, is raising up their income, not their expenses, is raising up their income and then living at that same standard, living below that our income to expenses, we kept raising it higher, and our whole focus was raising the income, raising the income, raising the income. But we left our expenses where it's at. Now, fast forward years now, because our debt level is zero, and our cash and our income rate keep rising higher, the same expenses that we had back when we were struggling is the same expenses we have now, but the income is astronomically higher. So if
right.
I just want to say, oh, let's go on vacation, we can just pick up and go on a vacation. I remember talking to you and you were saying, hey, I want to save and go on a vacation. One day I want to travel, one day I want to travel. Only thing I said, you're in a position to just get up and go.
Yeah,
But
exactly.
most people, but your whole life, it's everybody around you. The training around it has always been, hey, I need to save to go here. I was like, no, you can just go, just go. And then now you on vacation more than me, but I'm just saying that's how it was. It was,
I mean, and
but
that's my right, that was my mentality is what I was gonna say was, like you said, people are always saying, "Oh, like, I'm saving up to go on a trip," but then I was just thinking, it wasn't until recently when we talked about it where I was like, "Yeah, you're right. I could just just get up and just go."
just get up and go. And that's the thing. Like I tell people, and I don't say it to brag when because I always tell people places they need to go, and I'll be like, oh yeah, I've been to Dubai. Oh man, I wish I went to Dubai. How was it? And I'll explain to them. But of course, I've been there so many times. I gotta explain different trips, and they're like, "Well, how many times you been? I've been a lot, but it's because I can go a lot because of the lifestyle that it afforded me by not bringing my expenses up to my lifestyle.
Right.
Just because I have X amount of money and then people look on TV and see the Kardashians and see, NBA players and say, "Oh, you have this much money. You're supposed to have a Lamborghini. You're supposed to live in a gated community with mansions and this and that and that." I just said, no, I just rather have the money so I could do what I want when I want. Not that I'm going to go do something every day. It's just knowing I can wake up and say, I want to do this and go. It's really not. And that's the part that people don't understand because we're in a microwave society where it's instant gratification, ball to you fall. I'm giving you young lingo terms that you probably don't know about, but ball to you fall and all those other things that people are doing to just to think that, oh, I got to show that I have money. You don't have to show nobody. I mean, me, I'll go out in some Crocs, some shorts, t-shirt. I could look like an absolute bum because I always tell people I'd rather have the money than look like I have the money because I've lived both lives. I've lived the life of looking like I had it. Somebody say, "Let me see your bank account." I'm acting like Jesus calling me because I gotta go because they can't see the bank account. So I didn't, had the hats, the shoes, the clothes that make it look like, oh, he got money. But the truth of it is, I barely had $2 to rub together.
But now you can't leave out the part where you spend like $1,000 on Wendy's every month. So.
So now let's bring that up. Let's bring that up. But all right, I'll get to Wendy's in a second. But but that was the thing. It was I used to live that life of, hey, I look like I had it, but I really didn't. But then I realized once all the work that it took me to get there to have it, now I'm like, I don't want to look like I got it because then it's other nuances and things that come in there. When you really have it, then you got to worry about protecting your assets. You got to worry about now you made it. Now what people are going to try to come get it. So me, I leave the house. I look like a hobo every day, but I know I have it, so it's not a big deal to me to worry about it. But people that don't have it, they're worried about the image of, oh, what would they think? What would they think? What would they think? And now it's not. I don't care what they think because I knew when I was broke, I was living to impress other people. Now that I have it, I don't give a damn about impressing nobody because the truth is, the people that I'm trying to impress broke themselves. But we just have to, we play the game of who's who has more money, and it takes me back to when I was younger, and then living in the hood. We was wearing the Pro Wings. That's Payless shoes. Probably don't know nothing about that either. But we was wearing the Pro Wings and stuff. But they look like the real ones, but they really wasn't. Like back in the
Right,
day, the Reebok pumps. I had the Voights, but the ball didn't actually pump. but
right.
but but that's how it actually looked. And but it would be kids in the same hood I'm in. We all broke together, but they wearing the Jordans. They wearing the Reeboks. They wearing I think it's Nietzsche used and stuff like that. They wearing that stuff, but they're just using it, or their parents are buying it to show that they have money. But we going into the same project, so we all really ain't got no money. That's
Right.
that's what we doing on a larger scale. Once we reach that adulthood, we oppressing other people that don't have money either. Because if their parents back going back to my childhood, if their parents really had the money to do all the stuff and they had wealth, they wouldn't be living in the same hood I'm in, going to the same schools I'm in, or anything like that. And that's the thing that I realized over time that people are just trying to impress other people that are broke. So what's the point? So I rather just live my life and do what I do. I mean, I throw on a hat when I ain't cut my hair, throw on a t-shirt, throw on a t-shirt, some
Yeah.
Crocs,
When you ain't cut
throw on
your
some
hair.
Crocs. Yeah, I ain't cut my hair today, so I had to throw on the hat. But and that's just what I do. I don't go out like I used to, have all the button ups, the the jeans creased and the best shoes, don't let it have a crease in the shoe like where your foot bends. Don't let it have a crease. Those shoes got to go. I need more shoes so I can look the part. And now
Right.
I don't care where I go outside in. I mean, I sometimes it look so bad. I be thinking people about to put some money in my cup. That's how bad I look. I don't care. I don't care because I'm not out there to impress people that don't have it. I'm just out here living my life, doing what I'm doing, And uh last point, and then we can wrap it up. It's crazy. So a lot of my friends, family and stuff, they know of the success that you know, I've had. And the funny thing is, everybody, everybody house looks better than mine. Everybody. And then so when people, when I bring, family and friends around, other family and friends, and then they be looking like, oh, these guys gotta have money because their house looks stupendous. And I just sit there and laugh, like, yeah, okay. But
Right.
the thing is I didn't buy my house to impress. Now I'm not living in the projects or nothing where I'm at. But what I'm saying is I didn't go out there and look at my bank account and say, oh, well, I need a 12-bedroom house. And it's only three people in the house. No, I only need 2 bedrooms, but I had a function for the other 2 bedrooms, so I got 4 bedrooms. That's it. I don't need the swimming pool, beach view, all that. I didn't need it, but all of my friends they do. And I'm not going to sit here and throw shade on them. All of their houses are better than mine. I'm not being condescending when I say that. It is. But that is not only thing I need something is go to sleep in, take a shower in, uh, cook some food when I'm not at Wendy's. Wendy's is the key to life. But when I'm not
Yeah.
at Wendy's, uh, so those are the things that's important to me. Now to Wendy's, let me explain. It's secret formula to this. Now Wendy's is near and dear to my heart. Now Wendy's near and dear to my heart because when I was younger, my mom always used to take us to McDonald's, and then she would hook the corner and then go to Wendy's, and then she would get Wendy's. So when I got older, I said, "Oh, I'm going to Wendy's." That's it. So, but now when I go to Wendy's, I ain't out there balling till I fall. I ain't on
Uh,
the number menu. I-
Now these people gotta hear your orders. Be like, hold on a second. Let me get extra
yeah,
jalapenos, bacon.
yeah. But the thing is, this the part you're missing. This is the part you're missing in that whole thing. So I do ask for the extra jalapenos and things like that. But the part you missing is I'm getting the 4 for 4 menu. So I'm like, yeah, give me that 4 for 4, and then I jazz it up a little bit. I'm
Then
spending
you got
about
all this stuff. Yeah.
Yeah, so I'm spending about five and some change. So I could spend $4, but I spend about five and some change for my souped up thing, and I do it because remember my family was gone, and it was just me. I just figured it was cheaper for me to go to Wendy's and do the
Hey,
4 for 4 than to go cook. But I mean, it's not a and when it comes to that, I mean now it's not a financial thing. It's just I like Wendy's, and I
I
always
mean,
tell people the things that shape my life.
food is probably one of the biggest expenses, or could be for most people, I would say. And I mean, I guess for my wife and I, it works out for us because we both like cooking. So looking up how to make all the stuff that we enjoy eating out and just making it at home was like a huge benefit to keeping that cost down as well. Because I mean, it's a night and day difference what you would pay at home to make it than go out and buy it.
That
But
and
that worked
food
out for my wife and I because we enjoy making things at
and you're right. Sorry, I had microphone check issues there. But you're right. And so for my family, food is the biggest expense bar none. It's bigger than
home.
everything in my house. I mean, of course, don't have payments on others, but it's bigger than the light bill, bigger than, the utilities and stuff like that. But so just give you so I asked my son what he gonna go eat. My son's 8. You figure McDonald's, he's saying sushi. You know what I mean? So if he going, I gotta get in too, right? So yeah, food is our biggest
Or how he
expense by
told you,
far.
what was it when he got here and said, "Dad, you knew I was coming, and there's no snacks."
Yeah, yeah. My son, he has to he eats sushi, he eats seafood, he has to have snacks. He gotta have a whole consortium. And for me, and again, you remember back in the previous video, I was talking about how I didn't feel like a man because, heavily in debt and things like that. And this was before my son was actually born. Uh, but these are things that, based off my upbringing now, of course, the having my son was strategic financially. Not saying that's what everybody's goal should be or not. But what I mean by it was strategic financially, meaning me and my wife didn't have our kid until we knew that we could afford well and beyond what a kid would cost. Now I'm rethinking that, thinking this kid might go over our budget. But 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 that's what we did. And my son, he's he take us through there. I mean, he don't just he ain't a McDonald's chicken nuggets kid. I mean, like I was telling you, he invested in Dave and Buster's. Why? Because he's spending all my money at Dave and Buster's, and he's only 8 years old. And that's the thing. That's the thing that's going on and over here. So, but it's a joy to know that you can afford it and it doesn't cramp your lifestyle or you're not having to readjust your budget because again it's all about setting a budget and making as much income as you can over that budget but never bring your expenses to your income, always looking for more income or try to find to keep your expenses where it's at or bring your expenses lower to keep that gap there so you're not sitting there paycheck to paycheck, paycheck to paycheck. And then after you master that aspect of it of raising your income or lower your expenses, then it's other dynamics out there that you can do far as, investing, bringing in other passive income and things like that.
Right.
All right, with all that being said, thanks everybody for joining the channel. Again, hit the subscribe button, hit the like button, and please share the video if this is an interest to you or you feel that it's an interest to anybody else. Uh, Again, we appreciate everybody that watched the channel. Thanks for supporting us, and we'll see
Hit
you next
the
time.
notification bell. Hit the notification bell as well. So you
Notification bell so you can get
the
the
next
next episode.
video.
That's
All
true.
right. See you guys.